In 5, 4, 3, 2, 1. Hello, everybody, and welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the deferred sales trust, is an amazing way for you to exit highly appreciated assets, defer millions of dollars of capital gains tax so you can create and preserve more wealth, and help your clients, friends, and family do the same, not using a 1031 exchange. Each and every episode, we are joined by some of the best real estate, financial, and wealth minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. And for those who don't know me, my name is Brett Swartz. I'm the founder of Capital Gains Tax Solutions, and I'll be your host today. I'm excited about our next guest. He's on a mission to help all real estate investors add millions of dollars in value to their assets in flood zones. Please, and so much more. He's going to tell us all about it. Please welcome out of Tampa Bay, Florida, DJ McClure. DJ, how you doing?
I'm doing well. Thank you. Appreciate having me today.
Absolutely. For our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, I've always had an interest in real estate, and, I met this company 5 years ago, and it was a great fit, kind of getting into the company at the ground level and, having an opportunity to solve problems for real estate investors in this niche area of flood zones, which I honestly didn't have a background. My background being that of sales and business development. I came from the tennis industry. I was a tennis pro for a lot of my 20s, and, took those skills and applied them to, other scenarios of solving problems. In this case, it is flood zones.
Excellent. And, DJ, I believe you all been given certain gifts in this life, and these gifts have been given us to be a blessing and help to others. So I'm curious, what would you say was or is the top strength or gift you believe you were given, and how does that help how you help and bless people today?
I think it's connecting people. I've always had a fascination with, connecting people, whether it was through sport or through common interest. And so I had someone help me learn that skill as a kid. It was through tennis, and, learning to be more extroverted and learning how to pass on skills, skills that have multifaceted impacts, be that relationships or health. So, I've transferred that skill into the professional sense, and, and just enjoy meeting new people. And that's one of the great things about, the type of company we're in, is we work nationally. So, you're getting to meet people from all over the country and from all walks of life.
Fantastic. We're speaking with DJ McClure, nationalfloodexperts.com, nationalfloodexperts.com. Yeah, helping people, connecting people, solving problems. Love it. So let's dive right in to the topic at hand, which is bottom line solutions to lower flood insurance costs. Let's face it, flood insurance and insurance in general, they're astronomical highs, right? But maybe you'll tell us the rest of where we're really at with that, and dive in right into what's the problem that's going on right now, DJ, when it comes to this insurance stuff.
Well, FEMA just changed their rating system here within the last few years. And that's been a huge topic of conversation if you followed it at all in the news. In particular, if you've ever bought a property in a flood zone in the last few years, you know what I'm talking about. So FEMA's old rating system was what they considered to be outdated. And so they introduced what's called Risk Rating 2.0, which is designed to be a more accurate way of assessing flood risk for properties around the country. And so what it's done is it's made the rating model a little more subjective than it was before. And they've introduced new variables, but it's created quite a domino effect for pricing increase around certain parts of the country. And the problem with it currently is that there's still an overwhelming lack of transparency that insurance brokers are really battling. And then for the end property owner to understand, why the same property, can have such varying costs from seller to buyer, or, from something they may have bought a flood policy on 2 years ago, to buying a policy on the property next door today, and why the costs can be 10x what they used to be. So it's quite the conversation these days.
Absolutely. It's a nightmare for multifamily owners trying to underwrite their properties or buying assets where the insurance costs are 10xing, right? It's very, very challenging. It hurts the affordable housing or ability for people to build housing, to buy housing, to renovate housing, because the cost continues to go up. So got it. So that's the problem. I think it also, you want to touch on just the natural disasters that are going on, because I know from California, it's like fire insurance is through the roof, right? They're just cutting insurance altogether. And then you have like Texas and Florida for like hurricanes or floods, or just talk about the overall just affect the the overall environment, and just these big disasters that are happening that are increasing the cost for insurance.
Yeah, so I mean, I'll speak to kind of insurance in general. I'm not an insurance broker, just being fully transparent there. So what you're seeing is essentially carriers within certain parts of the country that are choosing to not involve themselves in those areas. And you're seeing that within the fire markets. We hear about that within wind markets around Florida and other parts of the Gulf Coast. And so you had a trickle-down effect with the amount of access to, the type of premium costs that existed in prior years. And so as you've seen year-over-year increases from the property side, now you're seeing similar effects on the flood insurance side. Now, the main difference between flood insurance and other lines of insurance is that you do have a program through FEMA that is federally regulated. And so anyone within most scenarios can get access to a flood policy. But what you've seen is a lot of private flood companies choosing to get into the flood insurance market. And kind of similarly, they're able to pick and choose which parts of the country they want to offer policies. And then they can also choose when to not renew those policies. So that's kind of in tandem with FEMA changing their rating system. In some instances, if you leave the National Flood Insurance Program, let's say you go to the private market because they've got a really attractive price point, but then 2 years later, they give you a non-renewal. With the way FEMA's program is working now, they've introduced what they call their full risk premium. And it's the ceiling price that FEMA thinks that you should be paying for that particular structure in that part of the country. And so if someone gets a non-renewal from the private market and they have to come back to the NFIP at that ceiling price from day one, it can be quite a dramatic uptick in pricing. So it's really making investors have to think big picture with choices they're making between which carrier they go with for their flood insurance.
Okay, got it. Somewhat in the sense that you have FEMA changing the guidelines, you have lots of, let's say, disasters happening, and then you have private industry coming in and people pulling out. It's like a perfect storm on multiple angles there, right? And now we're here being higher costs for insurances. So let's talk about bottom line solutions to lower flood insurance now. What is the number one secret to doing that, DJ, with what you guys do?
Well, the first thing is putting some attention and really questioning the flood policy, right? So we're an engineering company by definition. Our expertise is just a layering of different industries and expertises all in one: the engineering, the flood insurance, and real estate. And, so we encourage real estate owners, investors, to take a deeper look, right? So just because a lender requires you to purchase a flood insurance policy at closing, a lot of people don't realize the flood maps can be changed in some scenarios. Properties can be taken out of the 100-year flood zones, and that removes the requirement for the actual flood insurance from the lender. So that's one option. Secondly, you can then start really dissecting the variables that go into your flood policy. So if you have a policy through FEMA, there's a whole series of variables they're using in combination to calculate what your premium is. And so one of the things that can be done is really getting into the granular level of auditing those details, much like a tax audit, right? A right expert knows which variables to look at and which things will move the needle. And there are certain situations that can then improve the rating of the policy and ultimately reduce that premium. And that's the nice thing about FEMA's program, is that you show them the data to back it up. They will then lower the premium, and you can see that in a year-over-year savings impact as a result.
Interesting. Okay, good. So it's not all bad things for the new regulation, right? Sounds like there's some good things there. You want to find out if you can move your property outside of the flood zone, right? And two, you want to look at your policy itself and find ways to maybe work with FEMA. I think I caught that there. Either clean that up a little bit, DJ, for me, and then talk about the next step for bottom line solutions to lower flood insurance.
Absolutely. Yeah. So in terms of looking at the flood policy, you wouldn't know at the surface necessarily which variables are kind of moving the needle and what's making the price as high as it may be. So there's two things now that people have on their flood policies. They have the premium cost that they're paying today, and they have the full risk premium that's listed on their premium within the table of all the renewal numbers. And so the full risk premium means that's their finish line price. If they're paying $2,000 today, but their full risk premium is say $10,000, they're going to continue to increase until they get to $10,000. So there are situations, you would need to work with, an expert, someone like us that understands the engineering side, not only the insurance side. This is why insurance brokers actually bring us in as an extended resource of their team. And so you're trying to identify situations where you can prove to FEMA that the rating actually can be better, and that can either lower the full risk premium, which essentially lowers how much you're going to continue increasing year over year. And in some cases, that will lower what you're paying today also.
Fascinating. Okay. So hire the who, don't be the how. Hire people like DJ McClure at nationalfloodexperts.com to work with your insurance agents, professionals, to work with maybe talk about exactly what you do to get this to be lowered at the end of the day. What do you actually guys do?
It starts with an audit process, right? So we are engineers. We look at hundreds of properties every month all over the country. It doesn't cost any property owner anything for us to review the property. And we start going down a series of different avenues to see which different scenarios of solutions might apply to that property. And so there's certain properties where the data supports the property being taken out of the flood zone. And when that's done, FEMA issues a letter of map amendment. And when you present that to your lender, it then removes the requirement. So in situations like that, if an investor doesn't want their flood policy, they then have the option to cancel it, right? This transfers to future buyers. This can be a pretty dramatic, immediate price savings. And then in other situations, we may qualify that an insurance consulting solution that ultimately lowers their premium is possible. And you work with their broker to get all the information to the carrier to get approved. So this way they can have their policy updated and then start realizing those savings, immediately.
Okay. So sounds like no cost analysis audit on your property and your policy and the flood zones and such, and then looking at options to support to take the property out of the flood zone. It sounds like that's a fair summary. Yes.
Exactly.
Okay. The next question would be, what if I'm not in a flood zone, but I still have high property tax? DJ, can you help us?
Property tax isn't necessarily our expertise, but
I'm sorry, not property tax. I meant insurance costs, right? Yeah. So yeah, if I'm not in a flood zone, are you guys helping, or is it just simply flood zone stuff?
We are currently focused on flood zone properties, but under FEMA's new rating system, you are seeing policies in the lower risk flood zones that are still seeing pretty high premiums. And so, it is worth, in some instances, having, an engineering company look at those policies to see if additional data can be used to help lower that cost as well. But for the majority, most of our projects are properties in flood zones that have some type of lender requirement for the flood insurance.
Okay, interesting. Yeah, so because bought a new property in Florida, living here, and not a flood zone, about 15 minutes from the beach, which is definitely a flood zone, right? So, and you're in Tampa, right? So you're very familiar with all of those challenges. So would you say if someone's living in like a Florida or a Texas that maybe have higher insurance costs, that it's just a good practice to get with nationalfloodexperts.com and schedule a time to just do a no-cost analysis? Or what do you think, DJ?
Well, there's nothing negative that can come out of doing the audit, right? Information's power. So, whether or not you choose to take advantage of the solution today or in the future, for all investors, it's just worth having in your pocket because you never know as situations change. Maybe you're forced to refinance a little sooner than you had expected. And with refinances come different types of loan programs, and that can change your insurance requirements, insurance limits that you have to have, flood included. That can be a huge cost. But then also, you may get an offer to sell the property, and not having it in a flood zone can have tremendous property value increases, can attract different types of buyers. And so there's lots of ancillary benefits that can come from this analysis that we do to potentially add value to the property.
Perfect. Let's get practical here, right? So let's imagine I have 100 units in Florida. It's an apartment complex that isn't in a flood zone, but with working with you guys, it can be removed from the status of being in a flood zone, right? Walk us through just practically what some of those numbers might, on average, look like.
Sure. All right. So 100 units, we're probably talking about 8 buildings. So let's say an 8-building garden style property. In a standard situation, you're probably looking at, somewhere between 2,000 and 4,000 a building. So for easy math, let's say 3,000 a building. So we're at 24,000. So, at those numbers, right, that can be quite a substantial hit to the property. Now we're pushing close to $500,000 in property value for some asset classes. And so if you didn't want the flood insurance at closing, then you may be willing to say, okay, I'm willing to go without that insurance if the MAP amendment's possible. So now you've got a 24,000 annual savings that you can instantly realize. But then not to mention, if there's ways to reduce that premium, well, you could obviously take advantage of that too. At that price point, it's important to know, okay, just because I'm paying $3,000 a building today, what's the full risk premium for that going to be? And this is the conversation we're really having with investors now, differently than before. In the past, you didn't know what the ceiling price was with FEMA; it just kept increasing every year. So now someone might be paying $24,000 today, but with the full risk premium, they might be going to $50,000. And so investors are looking at the situation differently, saying, okay, well, if that's the case, I'm willing to hedge my bets that, I'm okay without it. And this is where it's important to talk to your broker, understand what the history of the area is, and really know what that particular opinion, how that fits into your investment strategy with your other partners, and then make an educated decision with the solutions that are possible.
So let's assume that you want to keep insurance, right? You don't want to have that risk just in case something happens, right? But again, it's in the flood zone, but then they work with you guys, right? And nationalfloodexperts.com, and you somehow take it out of the flood zone. So it went from about 3,000 a building to what are you talking about here, DJ, on average?
Well, unfortunately, that's one of the things that FEMA removed from their new rating system. In the past, they had flat rate pricing for anything that was outside of the 100-year in an X zone. And they removed that discount. So unfortunately now you can do a MAP amendment and it won't change the premium. They actually removed the flood zone from being one of the main multipliers in the new rating system. So again, that's where it's kind of having a holistic conversation with the ownership group and see, okay, what other ancillary benefits from either having the flood zone changed or, if there's ways to lower the premium, in the subsequent years. And then figuring out, does that solution make sense at that particular moment in time?
Okay, I think I'm following. So it sounds like even if you remove my property out of the flood zone by the stuff that you guys do, it doesn't necessarily mean it's a cost savings because of the FEMA structure, right? And
That's right.
and this, well, so then what would be an example of actually getting cost savings then, not using the flood zone example?
Well, so you've got other situations where if that same property is paying 24,000 and their full risk premium is, say, taking them to 50,000 total, there are solutions that will reduce the full risk premium. So we've had recent cases where, just to use the same numbers, it reduced their full risk by more than 50%. So let's say we brought their full risk premium down to 30,000. Well, now they're going to have a slower increase over the next several years topping out their policy around 30, as opposed to continuing to increase year over year in that 4 to 6 year span. Because right now FEMA has their rate increase set at 18% as the cap. So in that situation, they would continue to go up pretty substantially every year until they got to 50,000. Whereas if you're able to then improve the policy, lower the full risk premium, well, they're going to see a smaller increase, and the trajectory of their increases is going to be a lot less.
Got it. Okay, so hiring national flood experts essentially is going to cap the increases, right? It could be, or at least slow them down, so that every year you're not getting the max of 18%. Maybe it's only 10%. What do you think that is, that number, DJ? What could it be?
It depends on how all the factors, result out with, whether or not, in some situations, that same current day premium of 24 could reduce, right? So you may be able to lower the full risk premium to the point to where maybe they go down to paying 12,000, and they won't increase, but maybe, 3 to 5%, in the years to come. So you really have to look and see like what's changing from the consulting itself. And then once you know that, you can then pretty much forecast out in the subsequent years exactly what the increase is going to be. So it's every situation is very different now compared to what it used to be. In the old systems, things were a lot more predictable with the numbers between in a flood zone, out of a flood zone. And so now you really have to look at multiple factors within the situation.
We're talking with DJ McClure, nationalfloodexperts.com, nationalfloodexperts.com. The importance of hiring the who, not being the how. This is definitely one of those circumstances, right? You want to make sure you're hiring an expert to do an audit of your situation for your insurance, in particular flood insurance, and finding out if you are getting the maximum amount of savings that you're able to accomplish, that you're able to unlock is probably a better way to think about it. So make sure you're getting with somebody who's going to help you with that. DJ McClure seems like a perfect fit for that, nationalfloodexperts.com. That being said, DJ, are you ready for the lightning round?
Let's go.
All right. Knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget make sure to tell yourself to do?
I would hold on to the first piece of real estate that I bought instead of selling it a few years later like I did.
Gotcha. Question number 2, what's the number one book you've recommended or gifted the most in the past year?
Let's see. I would say the 10X Rule from Grant Cardone.
Excellent. Question number 3, what are you most curious about right now?
I am most curious about how I'm going to buy my first piece of my first hard asset. I'm an LP in quite a few projects, and so I'm looking to make the jump here within the next year or two myself. So I'm most curious on how exactly I'm going to execute that strategy.
Excellent. It's a good time to jump in. Question number, I think 4 now. What's your favorite leadership quote or theme that you strive to live by?
Pressure is a privilege. That's from Billie Jean King. You see it as soon as you walk into Arthur Ashe Stadium at the U.S. Open.
I like it. Question number 5. What would you say your biggest frustration is with the 1031 exchange as it pertains to exiting highly appreciated assets?
It's something it's a good, interesting question because, I had initially misunderstood the concept, only being an LP currently. So trying to explore ways that, I can further take advantage of something like that on future acquisitions. I think I understand that there are situations where, the group of LPs can all move together and potentially still take advantage of, those same benefits.
Absolutely. If you time everything perfectly and get it all lined up, you can. But sometimes these LPs, like the client we helped who had a $48 million exit out of Las Vegas, took a couple GPs, a lot of LPs, they were looking at not being able to do a 1031 because it's harder and harder to buy bigger and bigger assets. And so they were able to defer their tax using something called a deferred sales trust. In fact, that's exactly what we offer here at Capital Gains Tax Solutions. If anyone's curious, you can go to capitalgainstaxsolutions.com. You check out our new book, Building a Capital Gains Tax Exit Plan. And this gives you an opportunity to exit highly appreciated assets of any kind, crypto, business, LP, GP, save a failed 1031 exchange so you can create and preserve more wealth, or help your clients, friends, and family do the same. Go to capitalgainstaxsolutions.com and get started with your plan. Don't get caught not planning. We give you a free consultation and audit as long as you have $1 million net proceeds, $1 million gain, so you know what your options are. Just like DJ was talking about with the flood insurance. Don't get caught not having options available to increase the value of your property. Same thing with exiting highly appreciated assets, capitalgainstaxsolutions.com. DJ, that being said, second to last question. What's the number one leadership quote or theme that you strive to live by?
1% better every day. That's something we talk about with our sales team and our other team around the company as well. It's the mindset of, continuous improvement.
Absolutely love that. Last question. Helping all the people you've helped, doing all the things you've done, what would you say is the habit that you practice to stay centered in your values and stay encouraged to charge forward to reach new heights?
I think it's starting every day with a purpose, really attacking the mornings, attacking the day, getting out of bed with a plan. DJ, it's been more than a pleasure to have you on the show. Thank you for sharing your expertise in something that's very niche, like bottom line solutions to lowering flood insurance costs. For our listeners who want to get in touch with you, would you mind one last time, what's the best place for them to find you? They can reach me at info@nationalfloodexperts.com, or they're welcome to go to our website as well, nationalfloodexperts.com, find a wealth of information, and can reach out to any of our team to start the conversation. Fantastic. Hey, I want to thank all of our listeners for listening to an episode of the Capital Gains Tax Solutions Podcast, also streaming Expert CRE Secrets Podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust is an amazing way for you to exit highly appreciated assets, eliminate the need for the 1031 exchange shotgun wedding. But you got to get equipped and you got to understand what it is. And so we wrote a book, and we got a YouTube channel, and we've got this podcast. And we want to encourage you to go and take action right now. Download the free ebook. That's just 9 steps to getting the DST going, and or you can get the full book. Just dive right in by going to Amazon, building a capital gains tax exit plan. And if you're a business professional wondering, how do I use this DST to grow my business? We got you covered as well. We do training and coaching. You go to experttaxsecrets.com, experttaxsecrets.com. Hey, we appreciate everyone out there listening and reviewing, subscribing, giving it those thumbs up on YouTube. It means the world to us. We will talk to everyone again real soon.